I'm so confused.
All right, let's go. All right, go ahead.
Welcome to the show, everyone. We're back with another great episode. How you doing today, Sam?
I'm doing pretty good. Got a little project I gotta finish after this. Let's do in a few hours.
Okay, well, you see, that's the hustle right here at ASAP Finance, guys. We got a lot of stuff going on, but we're here and we're ready to teach you guys another lesson. So let's jump right into it. Anything to say before the show? Any reminders? Nothing?
I'll remind you to listen to this full episode and then leave us a review.
Okay, that's a great reminder. Okay, let's take a flashback here, okay?
Mm-hmm.
Picture this, okay?
I'm picturing.
I just started investing, right? Okay? I download Robinhood, but from my last episode, I know why you must avoid Robinhood. And I'm hopping on the apps and I'm like, oh shoot, I'm looking for some stocks to buy, right? Okay?
Mm-hmm.
I look up Ford, pretty popular company, okay? I type in Ford, right?
I wonder where you're going with this.
And I see the price of the stock. And it's at like $12, $10 back in a couple years ago. I'm like, wow, this stock is really cheap. Like, this must be a good company to buy, right?
You can probably buy like a bunch of Fords.
Yeah. And then I look at another stock. Let's say
Amazon.
Okay, the great example. Okay, about 2 years ago, I guess 2 years ago it was 2020. So it was probably flying 2 years ago after COVID. Maybe 2 years ago, everything was probably down a lot. Anyways, I look at Amazon, and Amazon is at like around $2,000, okay? I'm looking at Amazon, and I'm like, okay, I really don't want to buy Amazon. That is super expensive stock, right? Like, was that the right thought process when I first started, Sam, or?
I don't know. I don't think so.
Okay, so like, I'm sure people who just got into investing, they're probably thinking the same exact thing.
Mm-hmm.
They see a stock that's cheap, or they see a stock that's super expensive, and they're like, okay, I need to buy this one because it's cheap. That's not the case at all, okay? Companies, they're based off of the shares that they have like outstanding and then how much the stock is worth. And that's how much valuable is. If there's a company out there with only 1 million shares and it's worth $1,000, and then there's a company out there with 5 million shares and it's only worth $10, then obviously the one you have to do the math and figure out which one is more valuable and which one is less valuable. So that's a good thing to consider when you're like comparing like competitors of a company or whatnot.
So you're saying if I have one stock that's like not a lot and I can buy a lot of it, and I have another stock that I can only buy a little bit of, they're still the same amount. Like if it goes up a certain amount, it's still the same?
Yes, right. And especially with all the brokers like adapting to like young people and like people who aren't very wealthy and can't buy full shares, you can buy like partial shares. And companies and ETFs, which is honestly a great way why you can just set up automatic investments and just get the compound interest on SPY.
Yep.
And you can only buy like $5 of SPY at a time, or VU, and you don't have to buy the whole stock. So if you're out there and you see a stock like Amazon or Tesla now, or Google, they're all like super high and they're super valued, and people might be hesitant to buy them just because they're worth like $2,000, and people think like, oh, they're worth so much, right? But then what do the companies do to fix that? You guys are probably wondering, like, is there a way that a company can split their stock? Is there a way like they can lower their price of their stock? But you don't want to just lower the price of the stock because then you'd lose value in the company, right?
That would be really cool, I think. Is that a thing?
Yes, stock splits are a thing.
Oh my gosh.
You're probably familiar.
Tell me about this.
You're probably familiar if you've been following the news, like a smart investor that you are. Google, Amazon, and Tesla, guess what? They all announced stock splits like probably in the past month or so. Because they're just doing so successful. They're literally carrying the market right now. Those three companies are I don't know why there's so much buy pressure for those three companies, especially Tesla, because it's already so overvalued, in my opinion. But Google is doing a 20-to-1 stock split. So that means Google is still going to be the same valued company, right? There's going to be whatever the price, say it's at $2,000 right now, right? It's going to split into 20. So 2,000 divided by 20. What is that?
100.
100. There you go. Okay. So now Google, when the split takes place, Google stock will be $100, but they'll be 20 times more. So that company isn't losing any value.
I think I get it.
Are you catching on?
Wait, so if I have like one share of Google and then they do a 20-to-1 stock split, how many shares will I have?
You'll have 20.
Oh, wow. That's great.
And that goes the same with Amazon, and that goes the same with Tesla, which Amazon's doing a 20-to-1 stock split for anyone who hasn't seen that news, and then Tesla's doing a 5-to-1 stock split. So, do you know like why companies might want to do that? Like just not just to like make the number look cooler to invest, but do you know other reasons why?
Well, like we were saying, one of the obvious reasons is less people can buy a company that's trading at like $4,000 share price than they can if it's at 40. But I'm sure there's others too.
Right, and there's a term called liquidity of a stock, and it's basically like how easy it is to simplify. It's how easy it is to sell or buy the asset. So, like for example, there's real estate. Real estate is less liquid than a stock like Tesla or Apple because there's a lot more shares and there's a lot more people trying to buy and sell the stock. But like for a house or like different types of houses in like one area, there's less liquidity because it's harder to transact, first of all, because you have so many steps, and compared to a stock where you can literally just hop on Robinhood, but you probably shouldn't be on Robinhood. You should be on like another trusted broker and you can just buy that way. So that's the two differences. And when the company lowers their stock price or they split it, then there's going to be a lot more money inflow and it's going to look a lot more attractive to investors.
So you're saying like if there's less shares outstanding or like existing for a company, then it's less liquid. But when they split and there's more shares, then more shares that can be traded, it's more liquid.
That's exactly what it is.
I think I'm catching on.
And also, not that anyone should be trading options, but if there's also premiums for options, which will also be split in half because the strike prices will also be split at the amount that the stock splits. Just for anyone listening that is advanced and has done their own research into options and whatnot, that is also, they probably already know what a stock split is though if they're trading options.
And so like a lot of those newer investors, they probably are wondering if I can't look at the share price to know if a stock's cheap, what do I look at?
Right.
Well, we got our friend called the market capitalization. This is a little treat, short for, or a lot of people just call it market cap, and that's what, like Kyle was saying, it's the number of shares existing times the share price. So if Ford is at $10 and there's 1,000 shares, then the market cap is only 10,000, which is really low, obviously. This is just an example. And then Amazon's at $1,000 and there's only 100 shares, then the market cap is 100,000. So Amazon is the more expensive company because the market cap is 100,000, whereas Ford is the cheaper company, because the market cap's like 1/10 of that.
Right. So like this is an important thing to consider for anyone looking at like balance sheets of companies or like earnings report. It's important to look at their market cap and not just their share price, because you have to compare like their revenue. Like when you start to dive into balance sheets and you interpret them, we'll definitely cover like a episode in the future on like good ways to interpret them and like good ways to get started into that. But that's also important. You need to look at the market capitalization, how much the company is worth. And then if there's a company that's worth $50 billion and it's producing $2 billion in revenue, then there's a company that's worth $20 billion that's producing $2 billion in revenue. Obviously, one company is going to be more valuable, but there's obviously a lot of other factors like debt and whatnot that are in play. But that's just one example, a simplified example of how you should look at it compared to balance sheets.
And like this also played a lot of like a big role into the whole GameStop AMC thing. Like when it first started, AMC and GME, the market caps were a lot smaller, and there weren't that many shares compared to what there is now. So that's why it was a lot easier for the stock to move, apart from the whole short squeeze thing, because there's not that many shares and you have so many people buying it. Then it pressures the stock to go up because there's not a lot of shares free on the market for other people to buy. But then as it kept going and as the market caps became so inflated and the companies were they were like issuing more shares and diluting the stock, and there's more shares, it's harder for like that amount of people to make that sort of pressure on a stock and make it go up, which is part of why it started not being able to be pumped as much just by all those retail investors.
Right, and then another example of that, just to inform our viewers, there's buybacks of companies. So obviously the AMC situation and GME was a different scenario, but companies that have like access cash and they want to like reward their investors and give capital back to the investors, they can initiate a buyback of their stock. So they'll announce it and they'll be like Alibaba, they announced like I think a $5 billion buyback of their company's stock. So they're basically taking their money and they're buying stock, so there's less stock in supply. So that means the people that are holding the stock and the shares, their value is going to go up for the company because there's going to be less shares in circulation and the value of the stock is going to go up. So that's just another way that's healthy. If you see a company doing that, they're probably well off.
Yeah, exactly. And like whereas the mature companies will be doing those buybacks, the newer and the less valuable companies, they'll be doing those share offerings where they're offering shares and diluting the stock, which usually creates downward pressure because more shares are being offered.
Right. Yeah, it's also just a good way to raise capital for companies that are in need or that are like just in their startup stages and are running out of money. But also there's actually, not only are there stock splits where the stocks split into multiple, but you could have 10 shares of a company and it could split into one share. Or no, excuse me. It could reverse split into one share. And that's not good.
So it's like the reverse of a stock split.
That's exactly what it's called. Yes, Sam. You're very, very intelligent.
Yeah.
So, go ahead.
Oh, all right. So these reverse splits, just as like the share offerings are usually for less mature companies, reverse splits are not good. These usually happen when a stock has been so like pressured so far down to where it's trading in like the pennies or the dollars range, and they have to reverse split because it's just, I mean, there's no reason for them to want it to be trading at like 10 cents, really.
Right. Yeah, it doesn't look attractive. Like if you're a CEO and your stock is just going down and down and down, like it doesn't look good if your stock is at 1 cent, because everyone's going to look at it and be like, wow, this is a not a very good company that I should invest in. But then you look at Tesla and you're like, oh wow, it's so expensive. This must be a good company. Or some people might think that. Others might think it's not because it's so expensive. But psychology of trading at its finest.
And so for a reverse stock split, if you have one share of whatever stock at 10 cents and they do a 10 to 1 or a 1 to 10, I guess, reverse split, then you'll have, or if you had 10 shares at 10 cents, then you'll now have one share at $1.
Right.
So it's just the opposite.
Yeah. So it's just a good thing to keep in mind when you're like interpreting stocks. Make sure you understand that the market cap is not the same as the stock price. The stock price is just a number that the market has valued based on the number of shares that are in there. So make sure you're looking at the total amount of shares and calculating the market cap when you're seeing if companies are overvalued or undervalued. Anything else to add on that?
I don't think so.
Okay, well, we all know if you're on Twitter, if you're like following investing or really just any technology, we know like Elon Musk, right? He bought Twitter shares.
Who's this?
Elon Musk. He's a plumber.
Okay.
He's across the hall.
Oh,
No. And he bought Twitter shares, and then everyone thought he was going to join the board of directors, and then he didn't. For people who don't know what board of directors are, it's basically just like the chairman of a company, and they make decisions based on how much stock they own. Sometimes they might not own a lot of stock, which is in Twitter's case actually. A fun fact is that Twitter, like I saw this online, Jack Dorsey was like the highest member of the board of director with the highest number of shares, and he had like 2% of the company. Everyone else on the board had less than 1% of the company, which obviously is not good for the company because you want people that have skin in the game that are going to be on the board of directors and making decisions. But anyways, Elon, he came in and he was like, he asked all these questions on Twitter. I don't know if y'all saw him, but he was like, oh, does Twitter support censorship? Yes or no? And it was like no by like 70% or something. And then a week later, after he bought the shares, I think it was the next week, he tweeted out that he made an offer for Twitter with it was, what is it, $54.20. Keep in mind the last 3 digits of that are 420. I don't know if you guys have been following Elon, and he loves his memes and Dogecoin. So that was just a little funny thing that I saw. But yeah, there was also a TED talk that I watched about it. We're gonna dive into here in a sec. Some things he said, but make sure you guys will go watch it. It was just a TED talk. Look up TED Talk Elon Musk of 2022, and he talked about it a lot with the person that he interviewed. And he also said there was going to be a plan B if he doesn't get the. Mm-hmm. Do you have any?
I watched part of that TED talk, like the first half, but about the the offer he made for Twitter is at $54. That's like it's like a 30-40% premium of what it's currently trading at.
Yeah, which is
crazy because like that's obviously an enticing offer, but haven't heard anything yet of if they're gonna accept it or not.
I mean, like if you're like Twitter and you own a company, and like Elon, he buys these shares and he joins the board of directors, like he's basically talking like crap about your company. Then he buys shares and then he offers to buy it too. Like I feel like there's like an ego like influence of that. If you're like a CEO or like if you're at the head of Twitter and you just see the richest guy in the world is just like treating your company like it's pocket change, like literally, like it's like, I don't know, it'd be like hard for me in those shoes. I understand like how to just like give up your company like that when someone makes a good offer because their stock was not doing well in the past like month or two. So I mean, I understand like why they're having trouble getting the deal and whatnot, but I don't know what's gonna happen, to be honest. Do you have any opinions?
Honestly,
How do you think it's going to play out?
I don't know. I have my doubts. I don't know. I feel like Elon does like his memes, like you said, and he likes just playing around, doing this and that. I feel like there's a real possibility. I was listening to a podcast about this the other day. I don't remember what it was, but they were talking about this. I feel like there's a real possibility that he makes this offer, and then he sells the shares, and then he made a profit, and he never really intended to even own Twitter. I feel like for all we know, he could just be doing making a little joke around or whatever. But like obviously he could be, because with his money and his stature, he could just make a new Twitter,
Right.
and he would be able to attract a large audience.
Yeah, I never understood that. Like, I never understood why he wanted to. I guess he really loves Twitter, like the platform. He uses it often, like literally every day. He has like 84 million followers. So I guess he just has this connection with Twitter where he's like, okay, I don't want to invest in a startup in a completely new company and challenge the product that I use and love every day. And he also, a quote that he says he doesn't, quote, I don't care about the economics at all, end quote. So he's literally just doing this out of like aspiration for like making society better. Obviously he has the funds. He's the richest guy in the world. What is his net worth now? $380 billion or something, which is,
I think it's closer to 300. But that's the other thing. Like I think what was it, like $41 billion is what he would have bought it out for. Is like obviously most of his net worth is tied up in Tesla stock. So either he would have to sell it, which would not be that good for Tesla stock at that amount. But then again, he can just go take out loans, or he can raise the funds from anyone else that knows he has the money to back up any sort of fund.
Or who knows if he just has cash sitting around. Like you really don't know. He did sell all his houses like last year.
$40 million is a lot of money.
Yeah, it is. No, yeah, you're right. But I'm sure he could easily get a loan if he wanted to. And yeah, I think it's just cool that he's like trying to like improve the platform. There was also a Twitter thread that I read. I'll post the screenshot of the account here on Twitter or on YouTube, excuse me. And they'll also be in the show notes for people on Spotify. I read it myself. It's a very long Twitter thread, and he basically just breaks down how social media platforms are like influencing like what his theory is on why everyone thinks that they're like censoring everyone, and like why they're so opposing to different viewpoints. So if you guys read that Twitter thread, he basically was just saying like these Twitter platform, like Twitter and Facebook, it's not that they're against one opinion or the other. It's that they're forced like to make a decision because they can't have so many different opinions out there, and like it's so hard to not influence what people say on their own platform. It's hard to explain because it's a super in-depth Twitter thread. So I would highly recommend reading it or just doing your own research on Twitter censorship or Facebook censorship. But it's definitely something to read into because I think it's going to play out over time with like crypto and like decentralization like coming into play. And like if there's a platform where it's like you're choosing what tweets you can see and what tweets you can't see, like Elon was saying, like a black box, then I personally don't think that's good for society, and I think it should be more open source like Elon wants to do with Twitter. So I think it's good overall for society that someone's promoting this for a platform like that. But we'll see how it plays out, especially with them competing with Facebook and whatnot.
Yeah, and even just like the Twitter in general is just what they've done, and like what users have asked from them, and what they've actually pulled through and like done for the platform is kind of minimal, if you ask me. I mean, there's so many, like Twitter's just ridden with bots and phishing scams, and they don't really do much about it. I mean, I don't want to like say they don't do much about it, but it doesn't seem like they've done much to combat that.
Yeah, there's literally bots everywhere. Like I'll tweet with I don't have that many followers, and I'll still get bots on my account, and it's like that's insane. And that was one thing Elon said in the TED Talk too. He was like, one of the first things he's gonna do is get rid of the bots, eliminate like all the spam and the spam farms and stuff like that, which we talked about in a recent episode. We just mentioned it, but like it's not good for their platform that you have all these fake accounts that are just basically trolling and just trying to scam people. It's not good for society, and it's not good for the platform, because if people get scammed on Twitter, they're gonna anytime they think of Twitter, they're gonna be like, oh yeah, I got scammed, like whatever, blah blah blah, I don't want to go on that platform anymore. So it's good to like keep your platform safe so you bring people back. And maybe Elon will do that. Maybe who knows, Plan B will come in, and we don't know what's gonna happen.
Yeah, and another thing is like millions of users on Twitter are like in that category of crypto Twitter, and like there's so many different features that would benefit them and all the scam bots and stuff like that in that area that they just don't seem to be interested in attacking first, whereas that is something Elon would probably prioritize more than them.
Yeah.
Just because he supports like crypto and that sort of whatever you would categorize that as.
And just he knows how to like run companies successfully. So obviously he's gonna attack the problems that are like more relevant to like everyday users, because that's one of the most relevant things like to everyday users. It's bots, because you literally see them everywhere, and not so much people. I don't know. Me personally, not so many people care about like everyday censorship. They're more just on it to either have a good time, see some memes, and get off, or like learn something like on FinTwit, or if you're on crypto Twitter and you just try to like follow the news and whatnot. So I'll be interested to see how it plays out in the next week or two. Who knows?
Definitely.
Who knows if he'll start his own social media from scratch? But I can't see him doing that with all the other stuff he's doing in his life. Who knows?
Yeah, I'm sure he has loads of time on his hands.
Yeah, I mean, he is a plumber, so.
Very true.
No, yeah, it'll be cool though, to see how it plays out. I'm glad that like people are speaking out against this and trying to improve society, because that's what it's all about.
Fair enough. Well, anything to add?
No, I would check out the TED Talk and check out the thread. Those are two very like, I learned a lot. Just like open my perspective up on the whole issue. So make sure you check both of those out and just do your own research. We are not financial advisors.
And also make sure to check out those market caps before you check out those share prices.
True, yeah. Just because a stock is $1 doesn't mean it's super cheap and it's a good company to buy. And just because the stock is $1,000 doesn't mean it's super expensive. Yeah.
And not a good company to buy.
Right, exactly. So make sure you guys understand the terms and do your own research. Comment what you guys want us to see next. Thank you everyone for your time. Leave a review on Spotify. It literally takes 1 second. I think we're hitting that point where it's like, I think it's like 10 or something, where you hit the like where you can actually see the average. So make sure you guys drop it. It means a lot to us. We're trying to grow this platform. So
especially if it's a good review.
Yeah, especially the 5 stars out there. We love the 5 stars.
I think that's actually the only option. So when you do give a review, you can't do anything but the 5 stars. So make sure you do that.
DM us on Twitter after you 5-star with the screenshot, and we might do something. We might send you a cool emoji back.
Well, I guess we will catch our lovely audience in the next episode.
Yes, we will. Thank you for watching.